Welcome to the Riskwiser Zone, the podcast where we dive into the world of stocks and finance to help you make informed decisions about your investments. I'm your host, Lewis, and I'm excited to share today's discussion with you. We're starting off with a look at the current state of the market, and there's been some interesting developments lately. The Nifty has been swinging back and forth, trying to find its footing after a recent bounce. Our expert, Rohit Srivastava, weighed in on this, pointing out that the immediate resistance is around 23,400, with potential support at 22,800. He also noted that the Bank Nifty has been outperforming, with key levels to watch at 52,750 and 53,174. But what's driving these moves? As Rohit said, it's often hard to pinpoint a single reason, but one sector that's been doing well is financials, including insurance companies. We saw some strong numbers from ICICI Pru and other life insurance companies like HDFC Life and SBI Life may be worth keeping an eye on. Now, we know that past performance isn't always a guarantee of future success, but it's certainly interesting to see which sectors are leading the charge. And, as Rohit noted, when opportunities arise to buy into these segments on dips, it might be worth considering. Of course, this is all just part of the larger conversation about market trends and analysis. We'll continue to monitor these developments and bring you expert insights to help you navigate the world of stocks and finance. Remember, it's always important to do your own research and consider multiple perspectives before making any investment decisions. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're diving into the world of global trade and finance, where tensions between major economies can have far-reaching consequences. Today, we're examining the ongoing tariff war between the United States and China, as well as its implications for other countries, including India. As we've been following, the trade dispute between the US and China has been escalating, with both sides imposing tariffs on each other's goods. This has led to a significant impact on global markets, with many investors and businesses left wondering what the future holds. In recent news, China has replaced its top trade negotiator, Vice Commerce Minister Wang Shaowen, with Li Chenggang, a former Chinese representative to the World Trade Organization. This development comes as India is also navigating its own trade relationships, including with the US. The Reserve Bank of India has taken steps to mitigate the impact of tariffs and sustain economic growth, including lowering interest rates. Meanwhile, experts are weighing in on the potential opportunities and challenges for India in this complex global trade landscape. Ben Powell, an expert in the field, notes that trade tensions triggered a risk asset sell-off, but also sees opportunities in certain sectors, such as U.S. stocks and gold. However, he cautions that ongoing volatility and potentially sharp reversals are likely to continue. As we consider the implications of these global trade developments, it's essential to remain informed and up-to-date on the latest news and analysis. The situation is complex, with many factors at play, and it's crucial to approach the topic with a nuanced and balanced perspective. Stay tuned for our final story of the day, right here on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We've got one final story to wrap up today's show, and it's a doozy. You might have heard about the recent struggles in the U.S. oil production industry. But what you might not know is that even the company of Trump's energy boss is feeling the heat. According to reports, Liberty Oilfield Services, a company founded by Chris Wright, has seen its stock plummet by over 40% this year. Now, this might seem like just another company struggling in a tough market, but what's interesting here is that Wright has been a vocal supporter of Trump's energy policies. In fact, Wright has gone on record saying that Trump's administration has given the oil industry a green light to increase production, and that he expects to see positive economic growth in the next few years. However, with U.S. crude oil prices down 14% this year, it seems like the market is telling a different story. Analysts are predicting that if prices stay low, we could see a significant decline in U.S. oil output, potentially even a drop of 500,000 barrels per day. That's a big deal, folks. And it's not just Liberty Oilfield Services that's feeling the pain. The entire industry is on high alert. Now, I want to be clear. This isn't a partisan issue. This is about the numbers, and the numbers are telling us that the U.S. oil production industry is facing some serious headwinds. Whether you're a fan of Trump's energy policies or not, it's hard to deny that the current market conditions are posing a significant challenge to the industry. So what does this mean for investors? Well, if you're invested in the oil sector, you might want to take a closer look at your portfolio and consider diversifying. And if you're thinking of getting into the market, it's essential to do your research and understand the risks involved. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe. And until next time, invest with caution.